morning guys. We'll look at the quant tower to start off with. We're a little bit risk off, which agrees with the dynamic view of the sentiment in that the fact that the retail guys are buying the dips. We can see on the 24-hour difference, so if they keep doing that, it's going to reduce this number to 0, and if we go into positive, then the retail guys are going to be net long on risk. Okay, so if we keep having days like we did yesterday, we're going to tip over. So I think potentially next week we could be like fully risk off, okay, if they continue to buy the dips. So that being said, we know we are a little bit risk off, which is right because we need to flush out those retail guys, right? So we can't have them buy the dips. One thing I noticed about gold, if you use the quant tower and use the TPO, what we had here, we had an inverse head and shoulders. You see that those white lines? This is the park. So this one here, that one's lower than that one. This one is higher. So we actually had a left shoulder, right shoulder. So I'm going to investigate if we can spot anything like this that we can use to our advantage. So I don't know if that's clear. Can you see that? That park there. This one was lower, so this would be the head. This is the left shoulder. This is the right shoulder. And you know, we really launched off that right shoulder. 1854, 1874. We rallied $20, and the gold was a buy on the bubble. You probably would have noticed. So if I spot anything like this again, I'll let you guys know. But it's quite interesting. It had like a reversal on the inverse head and shoulders. So I'm keeping an eye on AJ. Obviously that's risk sensitive. So this should probably be falling, or it should be falling with this, right? So because this is risk sensitive. So let's have a look at some technicals and stop loss clusters. Perhaps we can look at Aussie to start off with. And I'll bring this across. Oh, is it going to let me bring it across yet, Will? My computer's slow today. Oh god, it's really slow. Alright, so we are a buy at the static level. We were 51% yesterday and it flipped over. The one above AU is 72.21. The one below is ridiculous. Keep going, there, right? So the retail guys have got fed up now and they've moved their stops really far at 62.10. So I think they just got fed up, been stopped out. So it looks like we're not going to probe any stops below because the majority had that cluster down there, right? So potentially up here, I think 72.20. Likewise, EU, we took out a little bit of liquidity earlier. It was 4.01. It's now 3.88. So it took out a little bit of stops, but not a great deal. So I think this is potentially likely. And it might grab that, and with any luck that it takes those stops, looks like that's going to be likely actually. 114.15, yeah, so the round number would come into play, and then that'll freak them out enough and then they'll exit. If we do keep rallying, 114.95, and then obviously what will happen is that when we get closer to those stops, they move their stops higher, and then we'll be above the round number, and that should liquidate those guys. So 115. So you know, you can see how you're going to target where you've got your targets, right? We've got a descending channel, but we're above monthly pivot, 50-50, right? EJ might be good actually because I spotted something. We had a MR1 rejection that's really quite strong. See that candle wick there? MR1 131.21, hit it on the nose. Exactly, so that's obviously going to be important. So 131.20. We are a buy, and they've gone long, so that would agree with that. We're in a descending channel, and we've got resistance. So SOC above is 131.90, and the one below is 129.98. We can call it 130. Yeah, we can call it 130. Look at AJ, and look at dollar yen. And then we'll look at the calendar, and then that'll be it, I guess. 83.34, 82.30. We're in an ascending channel. We are a buy. They've gone long, so that would be a mismatch. So if they go long, it's going to be a sell over time. You can see the average line. See that this went long. They've tried to buy this dip. there. They've tried to buy this dip, so we have to be careful. We're above monthly pivot. We've got monthly resistance above. UJ. Okay, the one above 115.55, one below is at monthly pivot. You see, so there's a confluence there at 115. So you've got round number support, you've got monthly pivot support, and you've got the stop loss cluster. So possibly down there, because you've got 3 confluences there. You are a buy, and they've gone long. So this is disagreeing with that as well. If they go long, it's going to fall, and it looks like they're going long. Right, so I think potentially we'll have a monthly pivot come into play at 115, and that should probably be a support. Note that the big picture, you know, looking at the price action, you know, we are making lower highs and higher highs. So, you know, we're technically quite strong. So we could be in one of these waves where we're coming down in order to buy. So it looks like potentially monthly pivot is going to come into play for a buy up. And so that's that. So remember to just look at the big picture. It's very easy to spot lower highs and higher highs. If they do that, then it's, you know, the structure is bullish. You can see, right? So we could be on a wave down in order to buy, but we want to get monthly pivot to hold. If we go below monthly pivot, technically we'll be a sell. Okay. So yeah, that's it, I guess. Unless you want me to look at anything particularly. We'll look at the calendar, and so we've got the US data, we've got jobless claims, and we've got inflation rate from Japan as well, and then we can look at the UK data, we've got Canadian data, and then US data. So and that's it. So hopefully you guys did okay. The gold was a good spot. I did put it out on the technical channel, but I don't know if it was clear. We had like inverse head and shoulders, so we'll have to wait and see. I think this is going to be a stop hunt, and don't forget 1891 is your average weekly range high. So I don't think we're going to exceed 1891, but we could possibly come up there, okay? And we might be risk off in order to flush out the retail guys.